going on, everyone? I'm Encore. This is Tomorrow Never Comes, and this video is about taking profits. It's one of the things I did not do when I first started investing, and I want to take you through some of the reasons why you should, although it seems kind of obvious, and some strategies to go along with it. So let's get right into the content here. All right. So first things first here. Is there a let me get myself out of the way here. There are 5 core questions to ask when investing. Now, who are you asking? You're asking yourself, okay? So you're asking, why am I investing? What is the reason for your investing? Are you investing to retire? Are you investing to make some quick cash? Are you investing for the long term? Like, all these things you need to ask yourself, right? Simon Sinek said it best, is know your why. I don't agree with that all the time, but in this case, 100% know why you're investing. And so then along with that comes, what is my goal? What am I trying to achieve? Now, you can say that, hey, I'm looking to retire, but what is that number? Come up with something, whatever that number is for you, or hey, I want to make this amount by 3 months or 6 months or a year. Now, you can't obviously dictate what the market does, but at least you have that in your mind, and it makes for a better investment portfolio and gives you a better strategy going forward. So then you got to look at, what are my targets? Okay, and this could be, the best version is when you do it automated. If you've got software, if you've got programs that allow you to, if you are trading, that is, to set in parameters of when you're going to do certain things. Okay, so are you going to take profits at this level, 10%, 50% higher than when you entered? Are you going to get out at certain times? So that's why it says, what are levels I can't stomach? You want to make sure that those parameters are set before you put your trade in. Okay, but that's day trading. But that even goes for possibly medium-term trading. If you've got a position out there, and let's say you're on altcoin or anything like that, you're in AVAX, or you're in some other coin that you just want a short-term play on, you got to know the levels that you want to get in and out of. Okay, and look, the point here is, can you stick to your plan? And that's another question to ask yourself. Have you put something in place that is easy for you to execute? That has to be in place. And I said AVAX, but it could be even with Bitcoin and ETH. Now, I am a long-term hodler when it comes to Bitcoin and even ETH, but mainly Bitcoin. But there are those I know out there who are trying to make money even off of the blue chips. Whatever you are doing, you gotta have parameters set in place before you enter the position. Okay, that's key, before you enter the position. And can I stick to my plan? Is kind of like, when people have these diets and they starve themselves and they do all kinds of things. Can you stick to it? Is it something that you can actually see it through, or is it something that you're going to lose focus on or interest in halfway through the plan? All right, so it's very key. So next up here, we've got, why take profits? Now look, I know this seems so obvious. If you would ask anybody, why would you ever take profits? It's so blatantly obvious. But when you are doing this, and I'll put myself in here, okay? When I first started, you don't even realize about taking profits. All you like doing is seeing profits on paper. So you love seeing your portfolio or your certain percentages up 50%. 60 to 70%, up 150%. Like, all of that stuff is great. But if you don't have it in that you're actually going to lock some in, then those profits are only on paper and you actually didn't realize any. Okay, so why take profits in any market, but especially the crypto market here? The crypto market, as we all know now, if you've just started, or if you've been in it from the beginning, you've known for a long time, it's very volatile. Now, it has its cycles, it has its upswings, it has its downswings, and it has moments where it trades sideways. So you need to take advantage of the profits that you have, because they can immediately flip. And we always think that, hey, look, if it's down 20%, it can always come back up. I know it's going to come back. Tomorrow it's going to come back up. And then it dips another 20. And then it'll go down 70%. And then it'll go down 90%. And you've lost out on all the profits that you initially had. Okay, so it's very important that we understand that the market is volatile, the crypto market is volatile, and we need to keep that in mind as to why we need to take profits. Another thing is staying liquid, aka dry powder. Okay, they always say have some dry powder on the side, meaning have some cash or stable coin, or in this case it would be most likely stable coin, that's ready to be deployed. To be honest, this is something I need to work at better. All right, it's easy when you have that dry powder on the side to quickly use it, but it's smart to be patient and hold on to that for times when the market takes, a significant turn of which you can then capitalize. All right, another reason to take profits is just to reduce position size. So if you've got, $1,000 and you're trying to make more money, and 90%, so $900 of that 1,000 is in one coin, you're putting yourself in a tough spot. Okay, so if you've done that and it's actually accumulating profits, you can take those profits off the table, reduce that size. So now if there are fluctuations in that coin, meaning it turns against you, you're not as effective. Okay, so you got to reduce that position size to de-risk. That is another reason why you want to take profits. And then lastly here is, you got to know, this goes back to your why. Are you doing a short-term, medium hold, or are you doing a whole HODL for, the long haul? That has to play into why you take profits. If you've set a plan that I'm only going to trade in this position for 2 weeks or trade for a month, that has to factor in of why you need to take profits, because that was your plan, right? If it's for a longer period of time, then less to worry about, right? So again, that's why you need to have a plan, and this is also why you need to take profits, is because you want to stick to that plan. So those are very key points there. Okay. On to the next here. One of my favorite lines here is, no one ever went broke taking profits. Ever. You know who goes broke? Those of us who look at our portfolio and see that we are in a profit and we watch it convert where it goes into a loss. That's the worst feeling. And then panic sets in and you sell out, you realize those losses, and now that capital that you had is gone forever. Unless you put your money back in, you get an upswing, and the upswing has to be even higher now just to recoup those losses. So remember, no one ever went broke taking profits. That's so key. All right, next. There is a variety of strategies to use when you're taking profits. I've picked two of them. I made them a little bit general here. We can get more nuanced, and I'll even throw in a third one. So number one here is that you want to convert incremental profit percentages into blue chips. What does that even mean? So you set a target. You say, hey, look, when I make 15% profit on this position, I'm going to remove that 15% and I'm going to convert it into Bitcoin or ETH. Those are blue chips. Those we know are going to appreciate, and they've tried, tested, and true, and they're going to be around for the long haul. At least my opinion, that's the case. And so you want to stack, you want to have a position size large in those two particular coins. So you're going to take profits from maybe more speculative things and then push them over into, Bitcoin or ETH just to build that stack. Now, there is an influencer that I've followed for quite some time, both on YouTube and Twitter, but mainly YouTube, is DaVinci J15. And he has this strategy called the little old lady strategy. And it's essentially what it is when you make a profit, 10% up of your position, you convert that into Bitcoin. And you just continue to do that. So you're building your Bitcoin stack, and now you're set for the future. The second strategy is similar strategy in terms of you're going to preset, well, I'm up 10%, I'm up 15%, or wherever you are, whatever percentage you determine that is your profit-taking percentage, and you're going to put it into stable coins. So you're going to put it into USDC or USDT. Okay? We talked about the reasons why to take profits. Well, this is that strategy, is to accumulate dry powder. So now if you've got $10,000 in USDC, the market takes a turn and you look at things that you actually believe in for the long haul or look juicy to you, then you've got that dry powder ready to deploy. Okay, so that is another option. So those two are very similar. It's just what do you convert your profit into? The third strategy that you can use is you can say, look, I'm going to continue to take profits either in one or two, that's fine. But that last 10 to 15% of my position, I'm going to let it ride. Okay. And what's a little bit nuanced in there is you can actually put your profits into your long-term positioning. So we talked about number one being into blue chips. So essentially what you're doing is you're taking those profits and you're putting into a long-term holding strategy, okay, or your portfolio. But what do you do with the remainder? And what you can do is let the last 10 to 15% of that position just ride it out and have some fun with it, because that is all gravy now. You've taken profits, you've made money on it, you've had gains, and you can kind of have some fun and see where it goes. And then if it's a significant amount of profits, decide if you want to get out entirely or start to take percentage profits again, incrementally. So it just continues. The game just continues like that, okay? So effectively 3 strategies. The first 2 are more like 1A, 1B. So you're taking a set amount of profits, turning into Bitcoin or ETH, or you're taking a set amount of profits and you're converting it into stablecoin, okay? And then the third one is after you've done all of that, you're not out of the position, you just stay in the position and let it ride out. Okay, so that's very key to have that. And what I want you guys to remember is you got to have these targets preset. It is so easy. It is so easy to say, I know what I'm doing, no problem, and I'll take profits when it gets there. Right? I fell into the trap many times where I said I watched the market so much. This is what I did early on, that I know when is a good time to take a profit and when it's not. But when nothing is preset, you miss the window, or you just get sucked into being greedy. And presetting these parameters really takes the stress off of you, okay, and unlocks in those profits when you should. All right, so we don't ever want to see our profits turning into losses. I can't tell you guys, if you have invested, there is not a single person in this world who has started investing that has not done this. I can comfortably say that, okay? That is part of the process of learning. But I want you guys, I want you who's listening right now, and if you've never traded before, if you've never invested in something before, please do not make the same mistake. You want to be able to lock in your profits. Now, if it's a long-term hold, lifetime hold, or a few decades or a few years hold, you're not even looking at your portfolio anyway, so it doesn't matter. But if ever there's a time where you want to get out or to rebalance or reduce your position size, you've got to preset your parameters. And whether it is done automated or mentally, it's got to be done, okay? Or write it down. When it hits this, I'm going to do this, okay? So that is another option that you can use. So the next one here is, this is the whole point of this, is that devising a plan is key. And what do they say? They say a failure to plan is a plan to fail. All right. So again, speaking from experience, it's so easy to get caught up in the motions of trading, whether it's crypto, stock market, or anything else really. When you get caught up in that, you just think, yeah, don't worry, I know when to take profits. I know when to get out when there's a loss. But you don't. Because the emotion, the psychology part of it is really what gets you. And you don't know that piece of it until you're in that mode, that mental framework. And so just remove yourself from that. Remove the psychology, remove the emotion, have a plan, set the parameters, and stick it through. All right, so here's the thing, is that a complete change way of thinking. Okay, you've got to plan for profits and losses. This is the whole point of what I just kind of made right now, is that you're changing from, listen, I'll know when to do it. Don't worry about it. Like, I'm smart enough, right? Or I'm seasoned enough, or I've heard it from everybody else. That's not going to happen to me. I can wing it. I am different. Okay, that you know how many times that gets to investors. You know how many times that happened to me in the beginning. I'm smarter than that. Don't worry, it's not gonna get to me. And then you get sucked right into the same thing, and you remember why everyone told you to kind of preset everything to begin with. Okay, so you're gonna change from that way of thinking of just off the cuff, winging it, I can make it happen, to I need to plan. But not only do I need to plan to take profits, I need to plan for both sides of the coin. I need to plan for when things are going right, but also when things are going wrong. And here's the thing. You listen to a lot of people say price prediction, but these are probabilities. And the really good ones, the really good price predictors or even influencers out there are going to always tell you You got to prepare for both sides. So when X happens, I'm going to do this. I'm going to take profits. When Y happens where it drops, I know when to get out, or at least reduce my position size. Okay, so that's very key to know both sides of the coin. And that's just a mentality. You have to always prepare for the option you don't want. All right, so taking profits, what is it about? It's about staying in the game. All right, if you get liquidated, meaning you lose out on your position, whatever you have invested has gone to zero. You don't have any more capital. You don't have any more money to play with. So if you're in Cardano, if you're in something, or whatever the position you may be in, and you let that trade or you let that medium-term position get so low that it dries up your capital, when the market turns even lower, you can't capitalize. So you want to be able to stay in the game, and that's the whole point. And that's why the next part here is you're limiting or avoiding FOMO and FUD. So fear of missing out, but the flip side, you're also missing out or avoiding fear, uncertainty, and doubt. Okay? And that's again both sides of the coin. A lot of what we love to do as humans is we love to jump in when the market is hot. Everyone's jumping on and you have that fear of missing out. But when markets flip, we're also on the same train of I need to get out. I need to get out. And that's a problem. And that's a problem for your position sizes. So when you take profits, you're eliminating or at least limiting how much of that FOMO and how much of that fear, uncertainty, and doubt you're playing into. So it's very, very key to take profits. All right. So in the end, what is this all about? Okay. So what we're trying to do is we want to be able to capitalize on downturns in the market. Now, a lot of us, what we think of downturns is, oh, the market's hot, to now the market's not so hot. But what can happen is your position, the market can go from down 20% down 50%, and from 50% to 70%. The mistakes that I have made is going too heavy into a position when I think the market is down enough. And the market does not care what you think. The market doesn't care what your feelings or opinions are. The market will do what the market does. So if you are in an altcoin, if you're in Bitcoin, you're in ETH, and it's down 15%, and you don't get out of your position, you didn't take profits before, and now the Bitcoin goes down another 35%, you don't have anything to buy into that position. So you want to be able to capitalize on downturns. Second piece really is a psychological piece. Is there's a well-being. Your psychological well-being is tied to profits and losses. It's such, when you get more seasoned, and that's an ongoing process, and even seasoned traders and hedge fund managers and all have a hard time with this, is the psychological aspect of being in an investment. Now, there's day trading, there's medium trades, there's obviously long-term trades. All of those have a different level of psychology. But just taking profits is like, sigh of relief. Like, I got something out of this position. Okay? So it's you want to make sure you're not doing an all or nothing. You either get out because you up 50% or you lost everything. So you want to stay away from that. With this psychological well-being, enables you to have longevity in the game. So you look at the crypto markets, you look at the stock market, you look at real estate. Over a long period of time, the markets do trend upwards. Now, that doesn't mean every asset in that market trends upwards. Some go to zero. But overall, on average, the market's going to trend upwards. If you're in good quality projects, you're going to have that upward trajectory. But if you are constantly going FOMO, FUD, it's going to weigh on you, and at some point you're going to be like, this is not for me, and you're out. So profits are going to help with having that longevity. Not even just from, well, you have money so you can keep playing with it, but just mentally. It just messes with your mind. So taking profits is a nice, calming sigh of relief for you and allows you to stay in the game. All right? And that's really, that's it from the presentation standpoint. But like, I can't stress enough that as a beginner, when I started, that was the biggest problem that I made. Is that especially when you're coming into a bull market and you think everything is on the up and up, and you never foresee the market to shift, even sideways. Forget about going the other way, sideways. And you never prepare for that. And so taking profits allows you to do that when things go against you. And they will. If you're in the market long enough, 100% you're going to face a bear market, a crash, some sort of dip. But vice versa, if you're in the market long enough, those dips, those crashes, they flip and become bull markets and major upswings. So you want to stay in the game, and you got to take profits to do that. All right, so listen, guys, I hope you just take profits. That's the message. Take profits. If I did some crazy editing on here, I would flash on the screen, take profits throughout the whole thing. That is the main takeaway. That's going to keep you in the game, keep you sane, and it's going to give you generational wealth long term. So guys, if you like this video, please hit the like button. It really helps my channel and helps what the message I'm trying to spread, and YouTube will thank you for it. So thank you, and I'll see you guys in the next video.